Good morning. It's 8:35 a.m. It's April 16th, Friday. This is an audio update on the stock market. I thought I'd give you a little snapshot of what's coming up here because we're processing the weekly update. And yes, once again, it's going to be a 30-some minute podcast, but we are going from the very short-term to very long-term outlooks and forecast scenarios, point of view, whatever, throwing in a little bit of news and macro information here, discussing some of the things that can go right or wrong with the market as always, and the politics and the economics and whatnot. At any rate, for this little snapshot, all I wanted to point out is, hey, the trend is up. It's strong. We got some fantastic economic news this week. We got fantastic economic news last week. We had some pretty decent news the week before that. And so they're just bulled up and going, and some of these big Wall Street bankers and fund managers, they're just all bulled up. Now, of course, there's also people showing how this is getting out of hand. It's too extreme. It's one-sided. There's going to be setbacks. I think we're going to see a setback this summer off that level one top that's coming, 3 to 7% down. I think we possibly could see a setback starting sometime next week on into the first week of May. That could be as much as 3% down, but I don't think it's going to be more than that. Could be. So there could be a little bit of drama coming here. But what I like right at the moment, the trend looks so solid here that I think there's a good chance, even though we're in our target range of 4160 to 4230, the indexes are actually on the low side of that target range. So I think there's more upside coming next week. But I think we got to start watching next week for a level 3 signal that's going to trigger a level 2 signal that can lead to a round of profit taking for the rest of this month. Now, it's possible it will only be end of month profit taking is all it is, and it won't matter. But these signals are important enough that what if the news cycle change is a little negative and scares them, then there'll be a little more profit taking. And the level 2 is large enough, important enough, you could actually see some fundamental forecasting that's bearish. In other words, a little something that means something more to them. Not necessarily more scary, but something that's actually taking a little bit more seriously, that they start forecasting farther out. So we don't know how this whole thing will transpire, how it will progress, but what we do know is that we're vulnerable to a setback. This has been a nice run-up, but if we miss it, I'm not that concerned because I still think the more important trend from February 1st is up into summer. It's summer where we got to be more careful, more aggressive, take that chance of being foolish, and maybe bet on the downside a little bit here. However, zooming out, still long-term bull market. So what do we expect for today? Well, don't know. Unfortunately, they've been so bulled up that it's distorting the level 4 intra-week fluctuations and some of the intraday fluctuations. There's discussion that we're losing volume on the way up here in business, so the market's kind of coasting higher. And I think it's just the bears are really scared to sell this market. There's simply no supply, and those who want in just have to chase the bid higher to try to get anything. Yeah, that's probably another reason why we're going to see a setback soon. But what if this thing just kept marching all the way higher in the summer? We just don't know for sure, but we know it is getting closer to being set up for some kind of setback. So at any rate, I think it's going to move deeper into that 4160 to 4230 objective range for the S&P 500. Granted, it's Friday. They could sell a little something today. But right at the moment, the market's acting quite firm. And I just don't know how to tell you to trade it for today or even on Sunday night, Monday right at the moment because these level 4s aren't really that helpful. It seems as though everything is just locked on automatic pilot of being bullish. Past results are not necessarily indicative of future results. Manage your risk relative to analysis of others and your own. Have a great weekend, and we'll get this weekly update out to you. I wanted to throw in the bond market. I really do think it triggered our time stop this week, and I explain this and I show this in a chart in the weekly update. I'm leaning towards lower interest rates into late May to early June. That can help the stock market. That can help that level 1 trend. I favor gold moving up because interest rates are coming down as we just got stronger inflation news that makes them think of lower real interest rates. That's a key factor that has worked for decades now, from what I understand, of getting them to buy gold. Crude oil, I think we found the bottom. We're on our way higher finally. What else can I tell you? Dollars working very well. I think we're going to see a lower dollar through the end of May, so that kind of coincides with what I think is going on. And interest rates, I don't have anything to say on Bitcoin. I think it's going to be choppy. I don't want to see it violate the low of 3 weeks ago, and as long as it doesn't do that, it's probably moving higher. So that's pretty much a wrap up for this week. Stay safe, stay healthy, and thank you.